So, Mark, a warning from Yardeni. Futures pointing to a very rough day for US stocks. What are the odds of a major sell-off at this point? And I'm not just talking about a couple of more percentage points.
Yeah, much higher than they were a week ago, that's for sure. As you've been hearing from everybody today, I mean, the significant change over the weekend is the fact that oil prices are now above $100 rather than below, and they're quite likely going to stay there for some time as well. That's a game changer, really, across asset classes, not just for US markets. There was a feeling among investors last week to some point when the US dollar was very strong. Maybe the Federal Reserve as a central bank could consider lowering interest rates, that there was some kind of insulation for US equities from some of the moves going on in the rest of the world. That really is out the window now. You're seeing such deep sell-offs across the rest of the world, here in Asia, in Europe as well. Treasury markets, yields climbing there aggressively. People now really on the back foot because of the jump in energy prices as well. There is zero chance that the Federal Reserve can constitute an interest rate cut in the near term. In fact, the way things are going, it looks like there will be a jump in inflation for US consumers as much as anybody else around the world. And that, under normal conditions, would make people think that interest rate hikes would be on the table. We're seeing that certainly priced in Europe, in Australia, in many parts of the world now. The conditions have changed completely. So rather than US equities being somehow on the edge of all of this, they're being dragged right into the center of it. And it'll be very surprising if the US market can withstand this onslaught, which is coming from the rest of the world now. They're really just a full part of it. You might get some soothing messages. Federal Reserve speakers may say they're going to take their time, they're going to assess all the data. We had a weak jobs report on Friday. People have looked past that pretty quickly. But when you've got oil prices above 100 and the impact it's going to have, US stocks are going to have a pretty tough time.
Yes. Mark, just very briefly, when I woke up this morning, we were looking at $120, $125 a barrel for oil, and I started to think things were getting disorderly and maybe out of control of the US administration entirely. Is that a risk this week?
The markets are extremely volatile. We no doubt will get central bankers trying to cool things down. The fact that the G7 is considering releasing some of that oil together, you can tell that the authorities are very, very concerned by what they're seeing. But typically when it's markets which are becoming unhinged, we look to central bankers, we look to them to be able to get everybody back and to say the markets are functioning properly, all that kind of thing. So we can expect a slew of European central bankers, Federal Reserve, all around the world, all trying to make people feel better. It's going to be very difficult when you've got oil prices where they are.